Hello, hello, hello. What's up, everyone? Just going to give this a few seconds. Hopefully, someone actually watches this thing. Comment away, ask any questions if you're watching. Hope everyone in New Zealand's having a good Waitangi day if you are lucky enough to have the day off, which I'm guessing you are if you're watching this video. What's up, Reef? How's it going? What's everyone up to today? Hey, Charlene. So I think today for the live stream, this is first ever live stream I've done on YouTube, so we'll see how it goes. Hopefully you can hear me okay. I haven't got a microphone hooked up to my computer or anything like that, but hopefully you can hear me okay. Ask any questions. I've actually just in the last sort of half an hour or so, basically been updating the spreadsheet I've put together around the stock picking 2020 challenge. So I thought I'd go through some of the results so far from that. I know we're only a month into the year, but there's some pretty interesting stuff going on in there, especially with the people who either went long Tesla or short Tesla like me. Basically, that's kind of deciding the leaderboard at the moment. So what's happening, Nguyen? I hope I'm saying your name correctly. Fairly warm down here in Welly for Waitangi. Yeah, I'm based up in Hamilton, if you didn't know that. It's not too hot here at the moment. We have had a few 30-degree days, and Hamilton gets super muggy. So not too bad today, but can't be at Wellington on a good day. The other thing that's been keeping me busy on Waitangi Day today, I was actually up watching the cricket last night, so I'm glad the Black Caps actually won something, if you do follow cricket. But what I've actually also been doing is reading this book, or rereading, I should say, this book, The Darndo Investor by Monish Pabrai. Highly recommend that if you haven't already. I've got sort of like a reading list of about 12 books I want to get through this year. That's sort of my goal. That was my goal last year, and I've never been a huge reader, so I was pretty happy to get through that. But that's definitely one I'm going to be rereading, so I recommend that if you haven't seen it before. All right, got some questions starting to come in. Is Forex trading feasible in New Zealand? I have no idea. I've never tried day trading. I don't see it as something that I really have any sort of edge over the average person or anything like that. I think with long-term investing and picking sort of individual companies, I might not necessarily have an edge over a lot of people that really dive into individual businesses and get down deep into that. I think there's a lot of people out there that can understand businesses and value them really well. I think where my edge comes in is being able to hold those businesses long term and be patient enough to wait to be able to sort of buy them at the right prices, where a lot of institutions can't really do that, because if someone gives an institutional or a professional investor a bunch of money and then they don't invest it, they might get fired for that. So I've never really tried Forex trading. Haven't tried day trading as the other question. Would I invest in Bitcoin? Look, again, I mean, my investing strategy honestly is pretty basic. Like I'm really looking for a business I can understand. So that tends to be, simple businesses usually, or something that's squarely in an area that I have some sort of understanding, like agriculture. I think I might have mentioned it in some very early videos on the channel, but I've actually got a degree in agricultural science as sort of my background. So I'm looking for businesses that I can understand, that I can value, and then basically I'm trying to buy them for a lot less than what I think they're worth. So that's as basic as my strategy gets. And when it comes to Bitcoin, I mean, I have no idea how to value that thing, and frankly, I don't know that anyone does really. So I'm not a Bitcoin investor. Never have been. I don't know if I ever will be. Who knows? So what's up, Machine NZ? How's it going? Where's everyone from? Are most people from New Zealand that are watching this live stream? We got some international people. Nguyen is from the US. What time is it over in the US? It must be like getting pretty late over there, or early in the morning, one of the two. Cool. Okay, we'll keep asking away with questions. I'm just going to New Plymouth, Auckland. Sweet. Obviously, everyone can hear me okay, so that's good. Sweet. I'm just going to dive into some of the results. I'm not intelligent enough to figure out how to share my screen on this live stream with you, so I'm just going to look through it at my end, and you're going to have to take my word for some of the things that are coming up so far. But just flicking through this 2020 stock picking challenge. So thank you to everyone who did enter. If you were one of the people that did enter, thank you for that. And I will put out a full proper kind of YouTube video going through some of the actual results and everything, and where kind of everyone's sitting at the moment. But in total, if I just have a quick look. So in total, we had 47 entries, and out of the 47 people, I've just gone through and updated the current stock prices. Out of the 47 people, I am currently sitting in 44th place. So I'm getting my butt kicked at the moment. And honestly, the main reason for that is I went short Tesla. I went short Tesla when it was about $450 a share, not in real life, just purely for this competition. And we had 7 people, including myself, that went short Tesla. Out of those 40 odd, about 7 people shorted it. I actually thought it was more than that, but 7. And those 7 people make up the bottom 7 places at the moment. So we're getting thrashed. Good news is my long pick, which was GraphTech, which I do actually own in practice, is up slightly. So that's good news. And if we scroll to the top of the leaderboard, our current top 5 I'll give you at the moment. James Welsh is in first place. Finley Ford is in second place. Tom 111 is in third. Artem Proshkin, I may have butchered that name, but you're in fourth. And Oliver Poole is in fifth. So that's the top 5 as it stands at the moment. The returns in that top 5, fifth place is currently up 17.4%, including both the long and the short. And then the fourth place also about 17%, and the top 3 are really close. So they're both at 32 or 33% returns so far for the year, only a month in. And if you're interested in the actual stock picks that James has got there in first place, he's long SPCE, which I believe is Virgin. I will just quickly Google that. Yeah, so Virgin Galactic Holdings, and that has grown his 5,000 hypothetical dollars to about $8,200. And then he is short, he's short Trip, and let me just look up what TRIP is. Trip is TripAdvisor, so also up on that position, and all up, yeah, turned $10,000 into close to $14,000. So, James, congratulations, you are in the lead at the moment. So, question from Luke Hodgkinson. How's it going, Luke? Thoughts on investing in the property market in Auckland at the moment? I'm certainly no property expert, but what I can tell you is that I wouldn't touch it with a 10-foot pole from what I do know. Mainly because I don't live in Auckland, so I mean, if I was looking at a rental property, which I have looked at a few, not particularly closely to be honest with you, but I've run some numbers on quite a number of properties that I've just been kind of looking through online, and essentially I'm looking for the highest kind of yield possible, the highest cap rate, as a lot of real estate investors would call it. So I'm looking at how much I have to pay for the house relative to how much it's going to bring in rental income, and then subtracting any expenses that come along with that. So rates, repairs and maintenance, making adjustments for needing to replace a roof every 10 years, and, all that sort of basic stuff. And basically, I'm looking for the highest yield I can get. That's not the only consideration, but I'm also considering things like the town that house is located in. Auckland is obviously going to have a very long runway of growth prospects, probably for a very long time. But looking in spots like Northland, Whangarei, Kerikeri, those sorts of areas, I think are probably going to grow a lot over the long term. And with property prices being really high, basically all around the country, and especially in Auckland, I think we see a lot of people kind of moving out of that main centre and heading north up to, lower Northland, Warkworth, Wellsford kind of areas, or even down to Hamilton where I'm based. So personally, I probably wouldn't touch that. I saw a presentation from a guy at Craig's Investments who did sort of like almost analyze the Auckland property market just like you would a stock. So looking at like a PE ratio of Auckland property. And I think it came out at something like 40 times earnings, which if you know anything about stock market investing and what people typically pay for businesses, that's about double what the NZ50 was trading for at the time. So in my opinion, pretty expensive. And with investing in general, whether it's property or stocks, I'm looking for no-brainers, honestly. So maybe one day, who knows, if it all does go down the toilet in Auckland, maybe I'll jump in, but not at this prices. Machine NZ property prices can't be sustainable at current prices. There's got to be a crash in the near future. Yeah, I mean, it doesn't make sense to me, and I think honestly that was probably a pretty logical thing to say like 5 years ago as well. But it's just kept going up, and in a lot of ways, you can say the same things about stocks too. So who knows? I hope for the young people trying to get into the property market's sake that there is some sort of pullback. Unfortunately, historically, when that stuff happens, it's usually at the same time that there's recessions and people are out of jobs and they're not in a good position to actually jump on those opportunities as well. So I don't know, set yourself up as well as you can, and if those opportunities come along, jump on them. Basically the same kind of way that I think about investing in stocks as well. Cam K, investing in housing seems to be very speculative as there is not a lot of cash return on investment. Yeah, that's what I mean. I've looked at some places in just local here in Hamilton. Man, you're looking at, with some places, the properties are so expensive. Like even if you have relatively low like vacancy rates, you're looking at 5 and 6% rental yields. Before you pay any expenses, before you repair anything, or you have above average vacancies, or before you pay rates or any of that stuff, it's hard. I mean, if people get to the point where in a few years down the track they're looking that they want an 8 or 10% return before they go in and buy a property, if rents stay static, that means the property price has to be cut in half to kind of reach that yield. So it's hard. Low interest rates obviously driving those yields down as well. Like in the past, if you could borrow money at 8%, you probably wouldn't buy a rental property unless it was producing maybe 12%. Now that interest rates are so much lower and you're paying, say, 3, 4, 5%, somewhere in that range, people are accepting, lower rental yields on their property investments and all those sorts of things. So interesting space. Certainly not in the no-brainer camp for me at the moment, so I'm not really looking at it. One thing I do really like about property, actually, though, is the fact that you can use leverage quite effectively. I made a video on this a long while back. I think it was one of the earlier videos I made, but one of the real downsides to stock market investing is you can't use leverage safely. You can be dead right on the business, but if the stock goes down in the short term, if the business has some sort of issue, which is often a time when the people using my strategy are going to buy it, you can get margin calls and be forced to sell at those low prices, which really isn't the case with property. So that's something I really like, and you can crank up your return on equity quite a bit. Like if you find a property that's making 10% a year and you can borrow money at 5%, you can kind of crank up your return on equity because you've got that 5% kind of bit of breathing room to crank things up. So that's one of the things I really do like about property that we don't have in stocks, which kind of sucks, to be honest. But yeah, who knows? It's not something that I've gone into at the moment. So Shailin, would you not say that Auckland properties were undervalued for a long time? Look, I probably don't know enough of the history to answer that, to be perfectly honest with you. I've only been in this investing game like 3 or 4 years. So, I'm only 25 years old. And actually, I did go to school in Auckland for a short time, but I don't know a huge amount of the history, to be fair. Cam, if property drops, you're looking at losing a lot of cap quick. Yeah. It's hard to say. I mean, we're on the hunt for no-brainers here, so at the moment it's not in that camp for me. So cool. Feel free to keep dropping in questions, guys. I will hang out here as long as you've got questions to fire at me. So keep chipping away. In the meantime, I thought I might actually talk about something that I heard from a talk I was listening to yesterday. Angus, when's the next powerlifting competition? I don't know, man. If everyone should go look up Angus Mackay on Instagram. I believe his handle is spelled the exact same name as his name just came up in the chat there. Angus is one of the stronger human beings in New Zealand and deadlifts over 300 kilos. So go check out Angus. I don't know, man. I think I'm a little bit lighter than I have been at the moment. Just there's going to be a random powerlifting side chat for everyone else with investing questions, so bear with for a sec. But yeah, I usually walk around at like 107, 108 kilos kind of body weight compared to the 105. I was like 99 kilos this morning, so I'm down a bit in body weight. I've still been training, even though I've had like a lot of holiday time. But I've actually been doing a little bit of strongman training lately, so I don't know if you can see this like monstrous bruise on my forearm. But that was from picking up like a Atlas stone, which for anyone that doesn't know is like basically a big like concrete ball that you load up onto a platform. So yeah, I've been mixing it up with a bit of strongman training. I don't know. I may do a powerlifting competition or two this year, but yeah, we'll just have to see. So everyone go follow Angus. Go give him a like. He's been to the world champs for powerlifting, so go check that out. But keep dropping investing questions as well. Where was I going? One of the things I was going to talk about, which I heard in a talk I was listening to yesterday, was actually Monas Prabrai. Again, I've been like frothing on Monas Prabrai stuff lately, but he was talking about cash. That's one of the things I've always kind of struggled to get my head around, how to think about cash, like, what percentage of the portfolio should be in cash versus in being invested, and what's the best way to think about that. And he had this analogy which was really good, or these kind of guidelines which I thought was really good, and I'm just going to look it up on my phone because I wrote down some notes. And basically, yeah, okay, which I thought was really good, and I'm just going to look it up on my phone because I wrote down some notes. And basically, yeah, okay. So basically, this is the criteria that Monas Prabrai has for making an investment. And if it doesn't kind of tick each of these boxes and each of these thresholds, basically the default is that the rest of tick each of these boxes and each of these thresholds. Basically, the default is that the rest of the portfolio goes into cash. So it's quite an intelligent way, I think, of kind of thinking about this stuff. So Prabrai basically will invest up to 75% of the portfolio into stocks if those stocks are going to provide at least a double. And judging from the way that Prabrai has talked about investments in the past, he's looking at probably a 3 to 5 year time frame for that investment to double. So judging from the way that Prabrai has talked about investments in the past, he's looking at probably a 3 to 5 year time frame for that investment to double. So if he finds, let's say, a non-growing business, it's going to have roughly the same intrinsic value over the next few years. He's looking for something that's basically half off. And if he can find enough of those opportunities, he'll invest up to 75% of the portfolio. And if that's all he can find, that's basically all he'll invest. So he'll still have 25% of the portfolio sitting in cash at that point. His next threshold was that he'd invest the next 10% of his portfolio, so taking him up to 85% invested if he could find triples. So he's getting a little bit more unreasonable, I guess, with his criteria. So he wants to find something that he thinks will at least triple in the next 3 to 5 years to invest that next 10%. The next 10% over and above that, he's looking for 4x's, so things he can multiply his money 4 times over 3 to 5 years. And if you're doing the maths at home, that gets us up to 95% invested if he can find those opportunities. And the last 5% is something that he calls very expensive capital. So very expensive capital basically means I'm not going to take this money out of cash unless you can find something that will give me a 5x in 5 years. And that's sort of his last category. So I thought that was quite a cool sort of way of approaching it. If prices are really high and there's not a lot of opportunities, if you're following those guidelines, you sort of naturally end up with more cash. And if we're in the depths of 2008 and prices are really low, then you end up with less cash, and you basically get to a point where you're fully invested. So that's a pretty cool way of thinking about it. I know heard a lot of people just throw out kind of generic numbers. The market's really high and 50% cash at the moment, and all this stuff. But I've never really heard anyone put some kind of hard numbers on it, which is something I am a fan of and definitely need. So that was pretty cool. I may make a proper video going into that, but hopefully that made sense. So that's something else I've been looking at. Luis, I never know if I'm saying your name right. Is it Luis Paz? Luis Paz. I apologize for probably butchering every name I've said. Every time I've said it, man, I wish I could see his criteria checklist one day. Yeah, for sure. I think Monish Babrai has a checklist for those who don't know, of basically that he goes through with every investment, and it's got something like Lewis might be able to correct me here if I'm wrong, but I think it's got something like over 130 points on the checklist that he goes through, and that sounds like insane, but I believe a lot of them are quite straightforward. It's looking at some basic numbers, and then getting into a lot more detail with so things like the debt and how that debt's structured, is it non-recourse debt and so on. So yeah, I'd love to see that criteria too. One of the things I have heard Monish say is that although the checklist is really useful for him, he actually believes that if you make your own checklist, it's probably even more powerful, because you'll have tendencies to make mistakes in areas that Monish doesn't, and Monish will have areas where he tends to make a lot of mistakes where you might not. So I think developing your own checklist would be quite cool as well. 26%, baby. Yeah. If you don't know, Monish also has a number plate that says compound 26, as in his goal is to compound money at 26% a year. That was one of his really early strategies. So if you do some maths around compound interest, and you make 26% a year, that means you double your money every 3 years. And that's what he was trying to do. So he was trying to crank, I believe it was 26% a year over 30 years was his goal, and that would turn $1 million into $1 billion. So he basically said he had $1 million he didn't need after selling out of part of his IT business, and he thought $1 billion sounded like a lot more than $1 million, so let's tackle this. And if you buy something for 50% off and it goes up to value over 3 years, then you've compounded at 26% a year. So that's where that comes from. I like this formula. That's great. More and more speculative. I'm not sure I'm following that. Sorry, Cam. I may have lost my train of thought or something there. Shawnee Pereira. Hi, Tom. Recently finished invested by Danielle and Phil Town. What do you think of the free pricing methods stated in the book? So back in the day, as in like a year ago, I used those pricing methods a lot, and I actually had one of my old videos where I was sort of going through that method for Apple just randomly blow up when I hit 1,000 subscribers a few months ago, and that's probably the reason that like half of you are here is because you've seen that video. And that I found that really useful, but to be honest, I've changed my philosophy a little bit. I do think the methods, I think if you can find companies that fit right into those 3 sort of valuation methods, the margin of safety calculator, the payback time, and the owner earnings or cap rate. If you can find things that fit into all three of those valuation methods, I think for the most part, you're probably going to be doing quite well. The only thing I would say is where I have found things that look really cheap on those formulas have often been in like commodity-based businesses that have been doing really, really well over the last few years. And I've just sort of automatically been extrapolating that really good performance forward, which is a little bit dangerous. You have the exact same dangers if you're doing more formal, like discounted cash flows and stuff too. But long story short, I think they're a great way to start with valuation. I've been meaning to do this for a little while now, but I really want to redo that Apple valuation video at some point and use more of a discounted cash flow approach, which is more like what I do now, but really good place to start. And it reinforces some discipline and making sure that you can actually, have the ability to work out the intrinsic value of something and making sure it's at a discount before you buy it. So they're not perfect to answer your question, but good place to start. Here we go. So Louise, is that Louise? Okay. I am I getting closer? SE through 58. Have you gone to Phil's workshop? If so, how is it? I've never been to Phil's workshop. As far as I know, he's only really ever held them in the States and maybe Canada or something like that, but never been. Read all three of his books and listened to every single podcast without, that's not exaggerating at all, listen to every single podcast he's ever put out, and probably about 50 of them I've listened to twice. But no, never been to a workshop. Asked Luis about the workshop because he has actually been to one, as far as I know. So Cam referring to the percentage invested about cash. I like this formula, like more and more speculative. I see what you're saying. I see how you would get that impression about it being. I may be completely misunderstanding what you're saying here, but I can see what you are trying to. I'm understanding what you're saying here, but I can see what you are trying to say about being more speculative because the return's higher. The way I think about that, and I'm pretty sure Monish thinks about that as well, is value investing fundamentally is about finding something that is selling for less than it's worth. There's many ways of going about that, but I would say when he's looking at something that can do a 5x, he's not necessarily looking at something that is going to grow at a huge rate. He's looking more at trying to buy things worth $1 that are trading for 20 cents. So in order for him to put that money to work, and that potentially would be a 5x, he's looking for extremely low risk, I would say. So I hope that answered the question. That video would be great, Tom. I'm just scared of overestimating the windage growth rate. Thanks for asking the question. No worries at all. I will get around to that video at some point, I promise you. Angus, how strict are you on the 50% discount on stocks? The fact that I'm hesitating probably tells you that I'm not mega strict. I would say I am strict, but what you've probably also got to recognize is that intrinsic value is not a number that you can calculate to 2 decimal places. I think if you have ever done a discounted cash flow and play around with like a company growth rate like 1 or 2% a year, or a discount rate 1 or 2% a year, or whatever it is, it can change that intrinsic value or the present value that you get in that valuation quite a bit. So I would say if I were to just take some, relatively optimistic analyst numbers and plug them into that discounted cash flow, then I'd probably be quite strict on that 50% discount. If I was using relatively conservative assumptions already, like let's say analysts think that Facebook's going to grow at 25% a year over the next, 5 to 10 years, and I put into my discounted cash flow, 15%, because I think 25 is way too optimistic, then I would probably be a bit less strict with that 50%, if that makes sense. So I hope that answers your question. I am just quickly going to run over and get a computer charger because we've still got some questions coming through, and I'm about to go flat. So you are going to have to stare at my couch for a second. I apologize. I will be back. Okay. Sorry about that. We have power. Cam got. Okay. Sorry about that. We have power. Cam, gotcha. Perfect. Okay. I'm glad that made sense. If you've got any other questions, keep them coming through. Is anyone actually doing anything for Waitangi Day, or is this a day that everyone just sort of relaxes and like has a couple of beers at the end of the day? One of the other things, because we're on the Monash train on this video, seems to be the theme that I've been reading about quite recently, and this is one of the things I noticed that investors often get asked, and I'm not putting myself into that camp of super famous people, but people like Monash and Warren Buffett, they always get asked about recessions and how are you planning for a recession, how are you sort of thinking. And I think if you can apply really solid kind of core principles across making an investment in the first place, I think it's not something you should really worry about. Cam, about to go for a surf, good man. Don't let me hold you up. I think I can upload these videos to YouTube afterwards. So if you want to watch this back at all, I think that's possible. We'll find out. If I can't figure that out, I apologize. We'll do another live stream in future. But yeah, often gets asked about recessions. And this was in the same talk that I actually heard this sort of cash discussion. So I think following the guidelines that Pabria's got around cash and only investing when you've got really compelling opportunities kind of solves the problem for you. And in respect to the fact that if prices are really high, you're going to have more cash, and typically after prices being really high is when we reach the end of an economic cycle and come into a recession, and you're ready to go with cash. So there's not really anything you have to plan for other than sticking to your full-time game plan. And the other thing that he said is, to buy really predictable and really low risk investments. So he's got this example of a company called Stewart Enterprises, and if anyone's ever read the Dando Investor or listened to a Pabrai talk, you may have heard about this one. But basically, Stewart Enterprises was a funeral services kind of company, and he was looking at them in, I believe it was around 2001. Pabrai kind of was flicking through Value Line, which is a service where you can go through and it just got kind of basic stats on different businesses. And it jumped off the page at him as a company that was trading at a PE of 2. And, the way he thought about it was after doing some work, and, there was a little bit of hair on it, as he put it. After going through the work and looking deeper into that business, he saw that, this thing's going to work pretty well. It's a really low risk business. He basically asked himself, this thing's trading at a PE of 2. If it can maintain its earnings for 2 years, I'm going to get my money back. And if there's a recession, is that going to affect this business? So if there's a recession next year, are humans still going to die? And the answer is obviously yes. So Stewart Enterprise is going to do perfectly fine whether there's a recession or not. The year after that, are humans still going to die? The year after that, are humans still going to die? The answer is obviously yes. So he was in this business that really financially isn't going to be affected by a recession that much, if at all. And it's trading really cheap. And, so he bought it. It doesn't matter where we are in the economic cycle. That makes a whole lot of sense. And, that's something that people are starting to learn. And if you look at the company that acquired Stewart Enterprises now, the name of which I forget, but if you do a quick Google search, you should be able to figure that out. I think it trades at more like 15 or 20 times earnings now. So people have sort of figured that one out. Angus, have you got many NZX stocks on your watch list? They seem to be quite overvalued and low growth. No, and I think you hit the nail on the head for the most part. I follow a lot of the agricultural stocks just because I come across those companies a lot of my day job, and it's pretty easy for me to keep up to date with them. I've made a video on the A2 Milk Company in the past, which is one I do follow. And to be honest, the science seems to actually be getting, more and more interesting around the fact that A2 milk may actually, be beneficial. So that's one I follow. Fonterra is one I follow, again, for similar reasons, just because it's in the industry that, I have some involvement with through work. As far as the company goes, it's so hard to predict. They've got a lot of issues obviously going on at the moment. They've got a whole boatload of debt, and they've got a policy where, Fonterra is a cooperative which is basically set up to pay the highest sustainable milk price possible to the dairy farmers. It's owned predominantly by dairy farmers. It's a cooperative company. So the real benefit to being a shareholder in Fonterra is to get paid the most for your milk. So if you're not a dairy farmer and invested in Fonterra, a very high percentage of your profits are going to be going towards paying farmers as much for their milk as possible, and there's not going to be a whole lot left over for reinvestment, dividends, and so on. So it's a company that I followed kind of just because, and I find it interesting, but really not something I'm looking at investing in, I guess. So yeah, to answer your question, there's not a lot that I follow, and I think you're pretty right with some of the valuations. But at the same time, interest rates just keep going that I follow, and I think you're pretty right with some of the valuations. But at the same time, interest rates just keep going down. So maybe fast forward 10 years, they'll look cheap, and we're in scary negative interest rate territory and that kind of stuff. Who knows? SC358, anything interesting in your portfolio at current prices that you'd like to share aside from FairChrysler and GrafTech? What's on your future watch list to look into now? So I still own FairChrysler and GrafTech, both of which are reporting earnings overnight my time, I think. So it's going to be a big 24 hours for my portfolio. So fingers crossed things go well there. But no, I'm still holding those two. I've got, I'm not going to share my other one. I have another position that's done quite well. It's up about 30% plus dividends over about the 13 or 14 months I've owned it. The market's been cranking along amazing as well. Maybe if I sell that in a few years' time, I'll make a video about it. So you're going to have to be patient on that one. But I will give you a clue. It is also technically in the automotive industry, but they don't make cars. That's about as much as I'm going to give you. And they're based in the States. So that's the only clues I'm going to give you. Maybe on a future live stream, I'll give you another clue. And if we put together a whole bunch of live streams, I'll give you a bunch of clues and you might be able to figure it out. But that's nothing really to share at the moment. I'm happy to share my watch list with you because I have a bucket load of companies on my watch list that I am more than happy to share. These are things that I'd basically buy at the right price. A lot of these companies fit the more traditional, fit the more kind of Phil Towny, little higher growth company kind of category, whereas GrafTech and FairChrysler are a little lower growth, but they're very, very cheap. Don't go out and buy it just because I said that, but that's kind of the way I'm looking at things. But a lot of these things on my watch list are a little bit more growthy, so let me just run through some of those for you. So and these are kind of the classic great companies at a fair price type investments where you'd be looking to hold it for the long term. Where GrafTech is really I don't want to say a short-term investment because I'm not trying to look at the momentum of the stock and trade it that way or anything. I'm still looking at business fundamentals, but it's not really a stock you hold for 20 years, I don't think. Chrysler are in the same boat to some extent. But yeah, a lot of these watchlist companies are kind of the more Buffett and Munger compounder type names. So I'll run through. So I've got Disney, Costco, Berkshire Hathaway, Apple, Facebook, Monster Beverage, Chipotle Mexican Grill, because of Phil Down, Microsoft, Amazon, Google, Alibaba. So those are all pretty well-known names, I would suggest, and that's sort of what's filling up my watch list at the moment. So I've done valuations on pretty much all of those companies. That's what I often think people should do, is put together a watch list, run the numbers on them, and then, stick them on the watch list. If they get to the right price, buy them. If not, just keep waiting and keeping up to date. There's the story of Ali Munger, who read, I believe it was Barron's. He read for, I think it was 50 years, and they had an issue come out, maybe slightly off on the numbers here, but I believe they had an issue of Barron's come out every week. Each week it had 2 stock tips. So that's 104 stock tips a year. Over 50 years is like, what's that, like 5,000 stock tips? I think my maths is right there. And after 50 years, he finally bought into a company called Tenneco. He got a 10-bagger on Tenneco in about 3 years, turned 10 million into, actually it wasn't quite a 10-bagger, he turned 10 million into about 80 million from memory. Gave that 80 million to Li Lu to invest over in his Chinese fund, and that 80 million is probably worth somewhere around 800 million, so close to $1 billion now. So from that one stock and being really patient, he's compounded money at ridiculous rates. So make a watch list, be patient. That's the story there. Easy Fix Mental Health. Have you ever traded Forex CFDs? What do you view on CFD? I know nothing about it, is the short answer. Even, I invest a lot overseas. So foreign currency does have an influence on my portfolio, but my approach to it is pretty basic. Like, for the most part, I'm investing in New Zealand and the US. I have owned things in Australia before, but really New Zealand and the US for the most part. So I keep some cash in it. That's the short answer. That's the way I manage foreign currency. I don't know a thing about trading it, to be fair. Cam Fonterra, I feel, is difficult because there's conflict of interest with farmer payout versus share payment. Yeah, exactly. And I mean, that's fair enough. I mean, the vast majority of shareholders in Fonterra are farmers. And, they've obviously made the call that, which is often, shareholder and director driven, and the directors are all dairy farm, dairy investors. They've made the call that they would much prefer to have that money coming back to them in higher milk payments throughout the year, rather than 1 or 2 dividend payments a year for, cash flow purposes and all those sorts of things. So it's just the way it is. Makes things difficult when you've got a company struggling to make ends meet, and they're digging themselves a hole of debts. It's hard, but that's just the way it is, unfortunately. So cool. I think we've been on here for about 40 minutes, so I hope everyone's got all their questions nicely answered. Let's give you another couple of minutes. If you got any more questions, now is your time. Otherwise, I'm going to carry on and probably keep reading the Dundo Investor, and I don't know, maybe go out and get some fresh air at some point as well. But any other questions, feel free to drop them on the chat. Hi Tom, I got some company shares, will vest in a few months. I'm in Oz and shares in the US. Do you know how the tax work for these? Will US tax when I vest it, then Oz will tax when I cash out? Definitely not a question for me. Okay, I'll give you my very, very basic understanding, because I'm not an Australian either. But my basic understanding is that this may be completely different for like company. But my basic understanding is, if you're an Australian that buys it in green, I need to read more Joel Greenblatt. I haven't done a whole lot of that, but that's something I need to do. I'd be interested to see where you're getting those numbers from, 21% and 15%, because As far as I know, we don't have all that good information on Prabrai's overall portfolio size. You've got to remember when you're looking at like Guru Focus and that sort of thing, you look at Prabrai's portfolio, is he is heavily invested outside of the US as well. So I think if you look at Guru Focus at the moment, you'll see Fiat Chrysler, GrafTech, and Micron, I think, are the 3 stocks that he has. He owns more than 3 stocks, and he's investing more than the dollar figures that it says on there. So they may be much lower percentages than that. I've heard him mention a couple of times that he usually opens positions around 10% of the portfolio. So I would guess that GrafTech is 10%. And I may even just look it up. I hope my camera doesn't cut out or anything when I do this. But if I look up the Prabrai Funds 13F, I would estimate Prabrai manages around $800 million. So if GrafTech happens to be $80 million, I'd guess it's 10% position. And if I have a look, where are we? Yeah, so GrafTech's around a $70 million position. So I'd estimate it's about 10% of the portfolio, but maybe wrong. If you've got really good numbers on that, yeah, definitely let me know. Challenger, video connection cut off as you were replying to me. Thanks, I'll rewatch. Please upload the Q&A video. Okay, I'll quickly repeat my answer just in case it didn't work. So if you sell a stock, if you're an Australian, buy something in the US and then sell it for a profit, you get taxed as income. If you happen to have held that stock for more than 12 months, you get a 50% break. So get proper tax advice, but that's my understanding. I cut out there. That's not. Oh, sorry. Okay, that's your position size. My mistake. Yeah, that's yeah. Okay, my mistake. I got the wrong end of the stick on that one. So yeah, big holdings for you. So hopefully they do well. Prabrai says infrequent bets, big bets, low risk bets. So hopefully they tick all those boxes. Where's the beard, Tom? Yeah, I shaved it. It's gone. It grew shorter. Yeah, I was just getting sick of it. Like I was getting itchy under one side and a whole bunch of stuff. So I don't know. I go through these phases of where I grow out a beard and then I suddenly just feel like shaving it. So that's basically what happened. One day I just woke up and I was like, I'm sick of this thing. So, and sometimes it'll happen. I'll be like halfway through trimming it with a little electric trimmer trying to tidy it up and I'll just mess it up. And then I have to shave the thing off. So it will come back. I guarantee you that. But yeah, gone for now. Gaku T, hi. Hey Tom, your internet is toast, breaking up. Okay, I'm sorry. I'm sorry. My apologies. Let's call it a day for the live stream. I will upload this video properly, and I hope that it comes out okay. Maybe in future I'll track down some better internet and do a live stream. So apologize for that. But thank you to everyone who joined in. I hope you did enjoy that. If you're keen to see more of these in future, definitely let me know. They're easy enough to do when I'm just chilling out on a day off. So let me know. But I hope you all have a good Waitangi day, and I will leave you to it. So let me now awkwardly figure out how to end this live stream. See you guys.